guess we could probably just kind of jump right into the first section here, which is amateur trading mentalities and strategies, and the difference between swing trading and scalp trading. So, what do you guys do mostly? Swing trade or scalp trade? What do you guys do?
I've always been more of a swing trader.
No. Any reason why?
Well, largely just the funds that I worked at. From an institutional perspective, we were just executing client flow, right? So, we were acting on behalf of a client. When I actually became a client and went to the hedge fund side of life, that we weren't really day trading mentalities, right? Your investment mentalities. So you're taking a longer term view. You're not trying to pick up, your larger focus is going to be with the analytical prowess and direction the fund wants to go, and to operate within those metrics. To have multiple buy sell trades in a particular name a day doesn't really look all that good for investors if your investment philosophy that you sold to these guys and what you do looks different than what you're actually trading. So you have to stay disciplined with what you're actually marketing to your clients.
Yeah. Regis, I know you did mostly day trading, right? I don't remember you doing many swing trades.
No, it's and with that, it's personal with me. And anyone who follows this course will have to make that decision for themselves. I like to sleep well. I don't want my trades sitting and doing whatever they're going to do without me being able to monitor what's happening. So I've every once in a while I'll do some swing trading, but the majority of what I do is just day trading. So I have complete control, and I can see exactly what's going on at all time.
Yeah, I think that kind of just fits into personality right there. The third point, aggressive, passive, impatient, and patient. If you do like that control, you don't like having just the market, being at the market's mercy there overnight without being able to act upon any sort of changes. Some people are okay with that. Some people can. What fits your lifestyle? Do you even have time to watch charts? Do you look at a chart and go about your day? Maybe you have other commitments. What about you, Chris?
I've played both sides of the fence. I started out with swing trading. That was really way back in the day when it was just, I had no idea what I was doing. So inevitably I was swing trading because I just buy something and then just hold on to it and hope that it goes up. And then, okay, great, I'll sell it. And that works to an extent. But like Regis was saying, that gets harder and harder to sleep at night sometimes, especially if you are on the fence on which way you think a market's going to be turning. And even then, you could be 95% correct, but that 5%, if you make a really bad call, great, you just wiped out all of your gains that you had over the last month overnight if something dramatic happens. And so I did a lot of scalp trading back in like 2016, 2017. And since things have picked up in my work life, I haven't really had the time to diligently focus on it. So that has inevitably pushed me back into swing trading. And so I tried to be a little more conservative. I'm not in the business of trying to minimize and maximize all of my trades. I don't need to be the first one in when a market starts moving a particular direction. But it's definitely a personality thing, right? Some people, they just want to get it. They just want to sit there. They want to be looking at charts all day long, and it works great for them. And then there are others that are on the other side of the fence of, I don't have the time, or I don't want the stress, because that's the other thing. When you're doing day trading, you're operating at much shorter time frames. So there's the fractal nature of markets, but I think that it can be a little bit less forgiving in terms of, if you make a bad call, you're going to find out real quick. Versus swing trading, you can see longer time frames where if something doesn't happen in the next day or two, it's not the end of the world. You can sit it out for a week or even a month or even longer than that. So that's kind of where I'm at now, is more on the swing trade. I still will do some occasional day trading, but I just don't have the time or the focus for it.
I think a lot of it too, like outside of just your personal, bandwidth, whether you have a regular job or, what your investment risk is too, you got to consider certain, like what markets are you investing in? Is there an ability, if you're trading equities or traditional markets, is there an ability to value companies, read up on reports, like actually take a view on a space, what's going on politically, what's going on geopolitically, tracking money movements, and what spaces are overvalued and undervalued, and how you view or your investment team views that particular space. A lot of that comes into play as well. The other thing that nobody's really mentioned yet is the cost of scalp trading.
That's a good point.
What levels are you playing for, and and how much are you willing to incur in transaction costs? If you're just coming into the scene, or whether you've been in the scene for a while, you really have to think about a lot of those things too. If you're trading cryptocurrencies, like a lot of us are focusing on now, the cost to execute is, I think, relatively high. The ability to value a particular coin is almost non-existent. So it really plays into more of a technician's hands. So as a trader, when you're trying to decide, are you a swing trader or scalp trader, I think the best advice is to really look internally and see, understand who you are, and what's your analytical prowess, how much bandwidth do you have to take pains, what your limits are. Are you a technician? Do you hire somebody else to do some of that work for you? I personally like to do that. I mean, I've read charts my entire career, and I'm very versed in it, but I've never taken interest in wanting to become a chartist and really map out things on my own. Sometimes I think you just got to understand what your skill set is too. Not one person can be everything. So while I don't really care about charting, and in efforts to become like a high quality scalp trader or swing trader, I think you have to understand what you're good at. And if you're not good at something, then hire somebody that does do that and does it well, and who's got a track record of of making successful calls for you. Otherwise, you're gonna churn yourself into oblivion if you're a scalp trader and you really don't have your rules set out on how you want to behave, what size of trade you want to behave, what's your expected move for that trade. A lot of rules you got to kind of really think into before you can actually just say, oh, I know I'm a swing trader, I know I'm a scalp trader.
Yeah, that actually does bring up another good point. So if you're a scalp trader and you say, oh, I'm doing really good, I'm averaging 1% a day, but if that's 30, 50 trades, you have to take into consideration what's the cost of actually executing all those trades. In the moment, each trade, it's like, oh, this doesn't seem like very much at all, but that stuff adds up very, very quickly. And at the end of the year, and you look back and you say, wow, I spent a lot on transaction fees. It can be a bit of a shock. And the other thing, like Brandon was saying, people that are doing scalp trading, it gets exponentially harder in terms of the time commitment when you are trying to trade more than a handful of tokens, right? In the cryptocurrency space, if you're trying to effectively scalp trade 30 different tokens every day, good luck. You're going to be probably up to your neck in terms of your time commitments to make sure that you're doing things effectively. And if you're not being diligent about your TA when you're doing scalp trading and you're trying to work 30 different positions and tens of coins at the same time, it's going to be a struggle, especially if you're doing it on your own. That's why a lot of day traders have analysts. They're part of actual trading firms. It's not just the lone wolf mentality.
Yeah, and I think it's something to say too, is because you see a lot of courses and a lot of material for scalp trading, which is grabbing those small trades multiple times a day, and there's got to be a balance here, specifically within cryptocurrencies, because unlike Forex or any other marketplace, futures, your transaction costs are multiples more, right? Doing a transaction on Coinbase is a hell of a lot more expensive than doing a transaction on one of the more reputable Forex firms. I know you guys all have traded Forex before, and it is a different dynamic you have to pay attention to, along with your lifestyle and personality. That's a good point you brought up, though. And then we have, one really isn't necessarily better than the other. I don't think both require that same confidence and discipline. I would argue maybe a little bit more so scalp trading needs a little more discipline. I don't know about you guys, what you guys think. I guess it can kind of go both ways. But that scalp trading, you do need to stick to that plan, right? Because how the heat of the moment when you're in there in the trenches trying to go, these little ticks here and there, it's a lot more pressure, I think, than what you get when it comes to swing trading, holding something overnight. But like Regis did say, it is personality. He doesn't like holding things overnight, not being in control there. So I think it can go both ways. I mean, what do you guys think? Would you think one is better suited to a beginner? I know, Chris, you mentioned that swing trading is how you started, and Brendan, you swing traded on an institutional level. So it's kind of interesting. You guys both started swing trading, but different levels.
Personally, I think if somebody asked me, hey Brendan, what do you think I should do? I'm going to start trading cryptocurrencies,
Yeah,
or whatever. I would encourage someone to take a swing trade view, a little bit of a longer term view, largely because you're inexperienced. Let's just say you're inexperienced.
Okay.
And you don't have the background of, let's just say you're coming ground zero, right? And you don't have the background, you don't have connections, you don't have a network that you can talk to just yet. You haven't found a proper technician to kind of give you a little bit of an extra layer of guidance as to how you want to be looking at this particular stock. I would also tell somebody, like, no matter what you're doing, start small, start in a handful of trades. Like, don't overwhelm yourself with trying to be too much off the bat. And I think as you make an investment, put some skin in the game, now it gets real. I wouldn't advise somebody to start scalp trading. I mean, I tried that out of college, right? For just like 4 months, I did it. I was terrible at it, but I had no education. I had nobody telling me what to do. I didn't have anybody set the table for me and say, here's a particular sector, and now go for it. Or here's the whole equity space. Pick whatever you want and trade it.
Mm-hmm.
So I mean, like, a lot of people are going to probably start and look at charts and try to say, okay, where does something look rich and where does it not? But they may just look at that. They may just look at candle charts, bar charts. It's like, oh wow, last time I hit this, it rallied. Well, maybe that's a decent entry point, right? But you have to have a little bit more background, in the space. Let's say you're in traditional markets, and why is it at that level, right? Have you read the news? Have you read what its competitors are doing? Like, it's, you really have to take that time to really dive into the investment that you've made and why you chose to make that investment, right? Was it something that happened to the company, came out and reported something that you liked, so you bought it? Was it a technical level that you liked? Okay, fine. If you like that technical level, why is it at that support level? Why did it go down that way? So I think there's a lot more. I think it's a wiser decision for two things. One, to start swing trading because you have the time to actually try to really think through your investment and think about the other thing, all the components that could be tied to it, without churning up too high of commission costs, etc. And I think as you get better at that, then maybe you start going for a high-paced game. And if you have the time, you want to say, okay, I'm going to be a short-term trader, and I'm going to trade undulations. I've figured out what's going on with this thing. I've watched this thing for a long enough time, with skin in the game, having traded. I've been kind of successful at it. Now I want to kind of take a longer-term view and kind of narrow it down. And I want to trade all the little undulations because I think I'm going to be more right than wrong. And I'm fine with commission costs because, I layer that into my investment thought process of how I want to, get involved with that. The other, probably most important thing that anyone engaging trading for the first time, and even if you've been trading for a little while, maybe sometimes you got to reset. Don't invest in anything you don't know in. If you don't know anything about, high-tech stuff, don't invest in high-tech names. You're going to read the reports, you have to know what they're talking about.
Yeah.
If you have a knowledge in a particular sector, or in a particular name, start investing with what you're comfortable with what you have comfortable knowledge in, and then you can start branching out, right? It's like going to Vegas. You're going to sit down to the poker table or blackjack table, and you're going to start betting, and you're willing, as you start, let's say you don't lose off the bat. Let's say you're actually making proper bets and you're winning, and now you start with $100, now you're looking at $500. Your willingness to have a higher level of gamble and risk tolerance when you're playing with house money is greater. Wait till you're sitting on a bunch of house money to start investing in things that you might not know, right? But the most disciplined traders that I've ever known, even when they're having the hard, they start with what they know. They will get more risky, as they have a little bit more freedom to do so. And as soon as they're wrong, they bring it all back down and they start from the basics again. What do I know? What do I do well? I'm going to stick to that until I can get out of this rut that I'm in, and then I'll transition to other things. But it always comes back to, like, knowing yourself, knowing what you're comfortable with, how much money are you in the money, are you out of the money, and refocusing on the things that you just know you can do well. Execute on that until you get some house money, and then maybe branch out. But I think it's easier for people to start with swing trading, and then as you refine your space, as you kind of gain knowledge in a particular sector or you've been trading a particular name for a while and you understand its behavioral patterns and the sector patterns, then maybe you want to drill down and say, I'm going to trade, tighter undulations.
Okay.
Yeah, I would say start with swing trading, purely for the fact that amateur traders tend to be very emotional traders, right? So if you look at swing trading and say, your average time that you're in a position is anywhere from a week to a month, the frequency that you are trading at means if you make a bad trade, it may be days or a week or more until your next trade, right? So they become very siloed events where you have kind of a period to recover emotionally for the next trade, so you don't make compounding bad decisions. Where if you are trying to scalp trade and say you start off your day with a trade that loses you 5%, that's going to possibly snowball if you can't stay in control of your emotions, and it's going to compound itself in a way that you're doing much more damage than you would have if you space those trades out. So that's where I guess emotional discipline comes into play a lot more, is in scalp trading, to make sure that you're not letting things kind of go off the rails. And so in that regard, someone who's starting out that doesn't really have the chops to handle trading at a higher frequency, stick with the swing trading.
Yeah, the other thing you bring up a good point too. I think it's wise to don't look at an investment with a monetary view. Look at it as a percentage view. And if you think, I started with $1,000 and I just lost $100, don't. I think that's a bad thing to put a monetary view on something, because it layers in emotion. This is business. This should not be emotional. Set your risk tolerance levels. Maybe you got the right idea, the wrong timing. Timing entry points is crucial. And set your downside limits. You may have the right idea, just wrong timing. Down 10%. I usually say for anybody is a healthy barometer for wipe your tears. If you're wrong, wipe your tears. Pay attention to it. Wait for it to settle down. Re-engage. But look at it at percentage levels. Don't think, oh, well, I can buy 1,000 shares of this one if I buy this company back, and only buy 50 shares if I buy this other company. Don't think about that either. It's percentage moves, and that's all you care about. What percent am I up or down? Not how many dollars I'm up or down. Dollars gets emotional. Percent is emotionless, in my opinion.
Or how much Bitcoin you're up and down, right?
Yeah, thank God I'm in cash right now.
Yeah, I know. As we're recording this, Bitcoin broke support at 6 and just headed down to about 4. I mean, 44 maybe.
45, 21, 50 is the level that I'm really sensitive to right now.
Gotcha.
It's kind of toggling in and around there, and if it breaks that, I mean, the next step lower could have a 3 handle on it, 36, 3,800. I think the next technical level for that, could be 33, 51 according to my technician, but that stretches out to the 28th. And this guy's been spot on. So again, know what you're good at, what you're not good at. If you're wrong, and we all still obviously love cryptocurrencies and Bitcoin, and I don't look at this as I lost a little bit of money from the 6,200 level. I bought it at 5,500. It traded down to 51. I sold out of everything.
Yeah.
Because I'm also, we also mine as well, right? So I had a lot of random altcoins, and the beta associated with those is greater than the other ones. So as soon as I made my confident decision, and I believe Bitcoin's going lower, I based it off of a technician that we value as a team, and I just liquidated everything. And then what I'm going to wait to do, as soon as I wait to see, I'm not going to catch a falling knife. I'm going to let it do what it does. I could care less what level it goes to. I'm going to wait for it to settle down.
Yeah.
I'm going to wait to see it cut. I'm going to wait to see where the trend lines are, where the support levels lie, and then I'm going to engage. And I'm going to take my my book down from I had a lot of coins, and I'm going to take it down to probably 3 to 5. And I'm only going to focus those.
I think that kind of goes into that what we were just talking about, right? Whatever the lifestyle is, right? You obviously have a full-time job building trading platforms, so your time can't be spent day trading, right? So swing trading is where it's at, for that sort of lifestyle.